we have data that we can compile. It really suggests about 70% of U.S. crypto owners have not reported their crypto income.
Today, I have a very special guest with us, a crypto tax professional who's going to help us understand some of the complexities around crypto taxes in the US. I know it's not a topic we love talking about, but it's important, and I think you all are going to take away some value from this. So let's welcome Clinton. How are you doing, Clinton?
I'm doing great. It's a pleasure being here, Tom.
Yeah, it was. I met Clinton in Vegas. He was one of the only speakers at the summit that I really connected with what he was saying, and so I really wanted to bring him on and get the down low, the basics of what is going on in the crypto world. It's a little complicated. You guys know my story. I tried to do mine in the past. Wasn't a great experience. So first of all, thank you again for joining us. Let's start it off with maybe, could you explain what crypto taxes are? I know that's a simple question, and why they're important for people like our viewers and really everybody out there.
Well, that's a great question. I mean, the Pew Research said that 42% of all crypto investors are men between the ages of 19 or 29. They've probably never invested in anything but crypto and not really aware of the tax implications. So a lot of times, our first encounter with taxes, you're working at McDonald's or somewhere and you get a paycheck and the government took a little bit off the top for Social Security. And it's already taken automatically for you. You never saw it, you never missed it. But our tax code says that we have to report all of our income. Well, corporations, companies they do that reporting for you when they pay you a salary or a wage. But when you make income on your own through investing, you have to report it voluntarily to the IRS. And the IRS uses a audit process to select people to audit to make sure that people are being honest and being correct on that. Now, right now, compliance on cryptocurrencies is the number one enforcement goal at the IRS. And why is that? Is because last year, Congress gave the IRS $80 billion, which is an enormous amount of money. $46 billion of it is specifically earmarked. That means it has to be spent on enforcement on digital asset owners and tax compliance on the digital asset owners. That's you and me. So that is, how much money is $46 billion? That is 4 times the annual budget of the FBI. And they're going to spend that money on coming after crypto investors. So, they're a big engine. It'll take a little time to rev up, but they are sharpening their knives. They're practicing. They're getting ready. So it's very important for every crypto investor to know about taxes because you have to pay taxes on your crypto income. So
in order to go about these, how would you recommend someone at home, if they were trying to file for themselves or even using a CPA, what would their first steps be? What kind of information should they put together? What do they need to kind of have ready for someone to get this, to get these done?
So a key concept, everybody should understand, this is number one concept. If you don't remember anything from this telecast, remember that anytime you dispose of, that is give up ownership for any token or crypto, you experience some sort of gain or loss, and that's a taxable event. You pay taxes on the net gain or loss at the end of the year. If it's a loss, of course, it's a deduction. If it's a gain, you pay taxes on it. So it doesn't matter what you bought. A lot of people think, Tom, that I'm only taxed when I go out to cash. I mean, it is a taxable event, but that's not the only time. Like if I have Bitcoin and I swap it for Ethereum, if I take Ethereum or I swap it for USDC, or I swap it for USD. All of these are examples of disposing of an asset. Each one of them, you experience a gain or loss every time I did one of those trades, and it's subject to taxation. So a very key concept. That could be very difficult to keep track of on paper. I mean, it's just impossible, especially if you do any regular trading. So you need to take advantage of online gain calculation services. And there's about a dozen of them, and they vary in ease of use and blockchain supported, exchanges supported. What happens when you use these services? If you have been trading on a centralized exchange like Kraken, you're going to get an API key from Kraken and you're going to give it to these services, and it's a read-only API. They can pull in the transaction records automatically that way. And then the service can calculate what gains and losses you experience trading on their platform. And when you move coins from a Kraken to a private wallet, it doesn't really know where you put it. But then when you bring it back out and say you moved it over to Bybit, then you can pull the Bybit data, and this software will map the fact that you bought it over here in Kraken at a lower price and you sold it over on Bybit at a higher price, that kind of thing. So this software is very helpful to reconcile the gains and losses. It's not necessarily fun for everyone because it's a bit of an accounting thing. And as you do more trades, that becomes a much more complex problem. The more exchanges you have, the more private wallets, it becomes more involved. If you do trading on decentralized exchanges where the data is pulled off the blockchain, that becomes a little even more difficult to classify the transactions as being taxable or not. But you use these services, and when they're all done, they generate an output file for you in the format of an IRS Form 8949. It's basically a spreadsheet. On such a date, I bought this coin, I sold it on this date for this price, and this was the gain I experienced. It's a spreadsheet that says that. You then take that spreadsheet and you give it to your accountant, or you upload it into TurboTax or whatever tax software you're using. And that's how you report your crypto gains and losses.
So those of us who maybe in the past don't have the best filing record, not speaking for myself, but for those of us out there that maybe didn't file them or didn't know they were supposed to, etc., is it too late to start? And what should they do?
We have data that we can compile. It really suggests about 70% of US crypto owners have not reported their crypto income. Some people, they aren't even filing tax returns altogether. I know a lot of crypto people, even influencers, who don't even file tax returns. They just are hiding. They're hoping to be off the grid. If that's you, what I'd recommend you do is give me a call. We can set up a custom plan for you. The challenge is that if it's gone on for a couple years, you might owe more taxes than you have money to pay. And that could become very uncomfortable because then you might be put in a position where you have to sell all your crypto investments. A lot of people say, well, I'll wait till the market goes back up. When the bull market comes back up, I can sell for profit and pay these things. And that's a valid strategy. What we would do is I would pull your IRS records, the records that the IRS has on a person, and see how much income the IRS thinks you made that perhaps you didn't report. And from that, we can start to say which years you're at greater risk of being audited on. And we can start to maybe amend those years and then maybe pay those off and maybe amend them or file them one at a time until we get you to a point of compliance where you're fully compliant again. We could try to structure it. There's a little bit of risk in that because taxes have to be paid when they're due, but not everybody can pay that. I will say this, we have a new podcast I'm coming out with, the Clinton Donnelly Show. It'll be coming out by the end of the month. And I've just recorded a podcast on why we need tax amnesty for crypto traders for the very reasons you just mentioned. It's extremely difficult to track records. People have gone back multiple years and they've dropped out of the tax system because they don't know how to get back in, get current. We need tax amnesty so they're not going to be crushed by penalties, so they can be brought back into the fold, start being compliant again, and not have to be afraid that the IRS, two guys from the IRS won't come knocking on their door. I have a video out there, and the call to action is to simply call your senators that we need tax amnesty, for a special tax amnesty program for digital asset owners.